Good day, students. You're welcome to this edition of Scholars Universal School Online Teaching. This is Financial Accounting. In this class for today, we'll be discussing the topic issues of shares. All right. So when we were paying it in full on application, this will be treated with respect to the terms mentioned above. That is, whenever you are paying or when you are issuing shares at premium or at par or at discount, and the total amount will be paid on application. Now, for shares issued at par, I'm starting with shares issued at par. Don't forget I said whenever shares is issued at par, that is, they are issuing the shares at the face value, that is at the nominal value. That is, they are not making profits, neither are they making loss. And I told you that the first thing you have to take note is they are paying. They will go to the bank to pay. Now, here, the shares will be issued at par. Don't forget. Now, the procedures that you have to take note is that the first thing is on the receipt of application of money. Please, you have to take note of this. This is why, one of the requirements for this particular topic is ledger entries. Because if you're finding it difficult to, post your ledger entries properly, you might not find it funny to, do the right thing in this topic. So you have to take note of that. Now, when you receive money, you're selling shares, don't forget, and people have gone to your bank to pay money. Now, what are the ledger entries that you pass? Can you give it a try? Now, don't forget, if you have said that you will debit bank account and you will credit the people that are paying, you are correct. The double entry is that you debit your bank account because, of course, the money is going into the bank. So what you're doing is you debit your bank account. So if you are debiting bank account, you are correct. Now, what is the corresponding credit entry? Who are those paying? The applicants. So you have to open an application account. So you debit bank account and you credit application account. So you're correct if this is what you have said. All right. So don't forget, I said the applicant will go to the bank to pay. Now, so on the receipt of the money, these are the entries that you will pass. And the second thing is that after you have received money for the shares, you have to allot the shares. That is, you have to give them. Allotment is when you are giving shares to members of, when you are giving to the people that have subscribed, that have paid for the shares, that have applied. Now, on allotment, what are you supposed to do? Now, you credit, because allotment is giving. Now, you're giving them, what are you giving them? You're giving them shares because they have paid for shares. So what you are doing this time around is you will give them shares, and at the point of giving them shares, that means in your shares account, which is the ordinary shares account, you have to, are you debiting or crediting? Of course, you will agree with me that you are supposed to credit. Why? Because you are giving out. So when you are giving, you credit the giver, then you debit the receiver. Don't forget, debit the receiver, credit the giver. So in this case, you credit your ordinary share capital account, then you debit your application account because they are giving shares to applicants. So you credit ordinary share capital account, then you debit application account on allotment. So those are the entries that you are passing whenever shares issued at par. Now let's take this question for example. Now on 1st of January 1990, Kalakuta Limited makes an issue of 13,000 ordinary shares of 2 naira each at par, and the application together with total amount are received for exactly 13,000 shares, and shares were allotted to the applicants. Show the ledger and the journal entries. Now for this question, to show your journal entries, you have to, what you're showing basically is, you're showing us all of these procedures I've explained here. That is, what am I debiting and what am I crediting? Which amount am I debiting? Which amount am I crediting? Now, for this first thing, the first thing here is that application together with total amounts are received for exactly 13,000 shares. And you are selling at par. That is, you are selling at 2 naira, which is this value. So 2 naira times 13,000 shares that you are selling is 26,000. So the first thing you have to do is debit bank account with 26,000 naira. Then credit application account with 26,000 naira. And the next thing is on allotment. What are you doing? Credit ordinary share capital account with 26,000 naira, which is 13,000 times 2 naira. Then debit application account with 30,000 times 2 naira. So that is exactly what you're doing. So let's open our journal entries. All right. So on our journal entries, don't forget, the first thing you have to take note is you draw your table. Ensure you write the name of your accounts, Kalakuta. All right. So bank accounts, 26,000 naira should be debited on the receipt of money. Then you credit application accounts. Then on your journal, don't forget one of the features of your journal is that you have to have the details of what you have done at the end of your transaction. So you're paying money collected on application. All right. So as soon as you're done with that, which is the first entry, the second entry is on an allotment. Application account should be debited because you are giving applicants, I mean people that have applied, you're giving them shares. So when you are giving them, they are receiving. The applicants are receiving. So you debit the receiver and you credit the giver. So debit application account of 26,000 naira, then credit ordinary share capital account of 26,000 naira. Then this should be paying allotments of 13,000 shares at 2 naira each. So we understand this so well. I mean, we can go ahead to post into our ledger entries. So on our ledger, the first thing is open your bank account. Then on your bank account, you debit, because you're receiving money. At the point when you are receiving, you debit applicant of 26,000 naira. Then the corresponding debit entry will go to your the applicant account. So you credit applicant account with 26,000 naira. Then the next thing on allotments, the first thing is ordinary share capital account. You credit ordinary share account. You are giving 26,000. Then you are giving to your applicant. Then you debit your applicant. So that is the end of. Now you can see that looking at this transaction, the application account cancelled itself. That is, it balanced itself. That is, applicant is no more there. So what you have now in this case is you debit bank account, which is bank account is still open, and the ordinary share capital account of 26,000 naira. So we'll move to the. Now, if you understand this so well, I want you to practice this first question. On 1st of January 1990, Scholars Limited makes an issue of 8,200 ordinary shares of 5 naira each at par. An application together with the total amount are received for exactly 8,200 shares, and shares with it were then allocated to the applicant. Show the journal entries and the ledger entries. So you can share with me. We could discuss about this on on the WhatsApp platform. If you want to join the WhatsApp platform, please check the description below this video. Alright, so let's move to the next part of this class, which is when shares are issued at premium. Don't forget, I explained earlier that when shares are issued at a premium, we are saying that the shares are issued at an amount above the face or the nominal value. Alright, so this will necessitate the opening of share premium account, and the difference between the nominal value and the shares that were sold will be credited to this account, which is the share premium account. Now the procedure for posting on share or for posting shares that is issued at a premium is that the first thing, when you receive your application money, it's still the same thing. It has not changed. You debit your bank and you credit your applicant because they are the one paying, right? Debit bank, credit applicant. Now on allotment, now this is when slight changes happen, because what is happening is that this set of people are paid beyond or above the money, the value of my shares. And you have to take note that regardless of whatever will be happening, whether they are paying above or they are paying below, the amount that is going to my ordinary share capital account has to be the face value of my share capital account, regardless whether it is premium or discount or par. Always whatever would be going or moving from my ordinary share capital account will have to be the share capital at the face value. So on allotments, I have to debit my application account with the face exactly, with the entire money that he or she have paid. And don't forget, the entire money that he or she must have paid would be the face value and the premium. So when you add up everything, it will give me the amount of the money that the applicant must have paid. Take for instance, let me paint the picture so that you get what I'm saying properly. Take for instance, I have a share. The face value of my share is 2 naira, and the applicant has paid 5 naira. So you will debit 5 bank of 5 naira, right? And you credit the applicant of 5 naira. Now, in this case, on allotment, you would still debit applicant of 5 naira. But in that 5 naira is can be split into two places. That is the face value of my share, which is 2 naira, and the profit element, which is my premium of 3 naira. So what you are doing on the credit side is that you credit 3 naira to my premium account and 2 naira to my ordinary share capital account. So by the time you sum up the 2 and the 3, you will get my application account. So on allotment for shares issued at premium, you have 2 credits, which is ordinary share capital account and share premium account, because what is going to your ordinary share capital account is the face value of the shares, and the profit element should not go there. Please, you have to take note of that, because this is the key thing that you have to pay attention to. You have to know that your share premium account should be going into a separate account, which is that share premium account. All right, so let's consider a question together now. On 1st of January 1990, Kalakuta Limited makes an issue of 13,000 Naira shares of nominal value of 2 Naira at 3 Naira. Now, the face value of this share is 2 Naira, but the Kalakuta Limited is, issuing it at 3 Naira. So in that case, they're making a profit of 1 Naira. So the premium is 1 Naira. So premium should not be, matched with the ordinary share capital for no reason. So it has to be, transferred to another account, which is share premium account. And we said, okay, in the question, it is said that the application and the money were received for exactly 13,000 shares. Now show the entries in the journal and the ledger. Now for this case, the first thing, okay, if you are preparing our, journals, create your table. Now for the first entry, you have received application money for 13,000 shares at 3 Naira. So what you are doing is 3 Naira times 13,000 is going to give you 39,000 Naira. So you debit your bank. You must have received 39,000 Naira in your bank account. So you debit your debit bank of 39,000 Naira. And who are those paying the 39,000 Naira? The applicant. So you debit bank, you credit applicant with that money, 39,000 Naira. So you debit bank account 39,000 Naira, credit application account 39,000 Naira. Then the description should be paying money, paid or received, paying money collected on application. Alright, so if you're done with that, we can move to the next which is on allotment. Now on allotment, don't forget that we'll be having 3 entries. Now the 3 entries, first of all, now what you're doing is on allotment, you debit your application account, which is 39,000 Naira, right? And because that is 3 Naira times 13,000 Naira. Now for the credit entry, now I've told you that for the credit entry, you'll be splitting the credit entry into 2, which is the face value and the premium side. Now for the face value, which is 2 Naira, it's going to be 2 Naira times 13,000 Naira is going to be going to your ordinary share capital account, and the 1 Naira, which is the balance, will be going to your share premium account. So what we are doing is you debit application account, which is 3 times 13,000, which is going to be 39,000. Then share premium account, which is the difference, which is 1 Naira. 1 times 2. When you take out 2 from your 3 Naira, you have 1 Naira. So 1 Naira times 13,000 Naira will give you 13,000 Naira. So it's going to your share premium account. Then the balance, which is 2 Naira, will be going to your ordinary share capital account. So by the time you sum up 13,000 Naira with your 26,000 Naira, you get 39,000 Naira. So that gives us the, allotment, being allotment of 13,000 shares. Okay, so if you understand this so well, we could go ahead to prepare the ledger entries. And for the ledger entries, the first thing you are doing is you debit your bank account with 39,000 Naira. Then opening application account, the corresponding credit entry is going to application account, credit entry, bank 39,000 Naira. And for the next one, you are opening ordinary share capital account. You credit ordinary share capital account with 26,000 Naira, 2 times 13,000 Naira, right? Then the corresponding debit entry will go to application account. Then the last part is share premium account, right? 1 times 13,000 Naira, you have to credit this with 13,000 Naira, then the corresponding debit entry is going to your application account. So this makes up for your application account, which is 39,000 Naira, 39,000 Naira. Now you can see that you have 3 accounts that is left open, which is your bank account, ordinary share capital account, and your share premium account. You can see that this makeup of your bank account can be found in both ordinary share capital account and share premium account. So what this is telling me is that at the sale of this share, I have made this amount of profit, which is my share premium account. Alright, so that's that about that. If you understand this so well, please practice this question. On 1st of January 1990, Scholars Limited makes an issue of 8,200 ordinary shares of 5 Naira each at 7 Naira. Applications together with total amount are received for exactly 1,200 shares, and shares were allotted to the applicant. Show the journal entries and ledger entries. So practice this question, please, because we'll be assessing you at the end of the week. Alright, so if you understand this so well, let's move to the last part of this class for today. Shares issued at discount. Now, whenever shares issued at discount, I explained earlier that it is issued at an amount below the nominal or the face value. Now, a discount will be open, and a discount account will be open, and you have to be debiting the discount account with the difference of the face value and the issuing price. All right. Now the procedure is that for the first thing, at the point of receiving money, it is not you are still. Nothing has changed. On your receipt of money, you are still debiting your bank account because, of course, money is getting into your bank, and who is paying? Applicants. You credit applicants. You're still fine. Now on allotment this time around, what you're doing is, don't forget I told you that regardless of whether you're selling at discount, whether you're selling at premium, or whether you're selling at par, you will still end up giving shares to the tune of that nominal value. At that face value. So what you're doing is you credit that ordinary shares at the nominal value, and don't forget corresponding debit entry is going to your applicant account. But in this case, the applicant has not paid up to the amount you're expecting from. That's the amount that is up to the face value. So in that case, what is happening in this time around is that you will have to be debiting the difference to the discount account. So what you're doing is you debit your applicant account. Don't forget the applicant has not paid the amount that is up to the the money you're expecting for the the face value of the share. So what you do is you debit the amount that will mix up with the money applicant has paid. You will be debited to the share discount account. Then you credit the ordinary share capital account. All right. So if you understand this procedure so well, can we practice this question together? On 1st of January 1990, Kalakuta Nigerian Limited makes an issue of 13,000 ordinary shares of nominal value of 2 naira at 1 naira. Application and the money were received for exactly 13,000 shares through the entries in the journal and the ledger. Okay, so preparing our journal, the first thing you have to do, the first thing is create your table, write the title of your account, and the next, on the receipt of money, what are you doing? They are Kalakuta Limited at the point of selling these shares. Of course, the shares is 13,000 ordinary shares with a face value of 2 naira. However, the applicant are paying 1 naira. They are not paying 2 naira. Even though the face value is 2 naira, they are paying 1 naira for all of those shares of 13,000. So in this case, the amount of money they'll be receiving will not be 2 naira at 13,000. It would rather be 1 naira because what they are paying is 1 naira. So 1 naira times 13,000 would be 13,000 naira. Are you with me? So they are receiving 13,000 naira in the bank account. So bank account, you debit 13,000 naira, then application will be 13,000 naira credited because they are collecting the money from the applicant. So this is being money collected on application. Now the next thing is on application account. On allotment. What you're doing is you're debiting applicants for 13,000 because what they have paid is 1 naira times 13,000 naira. 1 naira times 13,000 shares. You debit applicants with 13,000 naira. Now the difference that will make up the ordinary the nominal value of these shares. Of course, the nominal value is 2 naira at 13,000, which is 26,000. The difference is 1 naira, which is 1 naira times 13,000, which is 13,000 naira. Will be going to your share discount account. So what you do is you debit the share discount account of 13,000 naira. So by the time you sum up 13,000 naira of applicant and share discount of 13,000 naira, you will get the makeup of share capital account, which is 26,000 naira. So this justifies what I've said earlier, that regardless of whether you are you're selling using your shares at discount or at premium, whatever you are taking out from your share capital account has to be your nominal value. So 2 naira at 13,000 will give you 26,000 naira. So that's what we have here. So the description is allotment of 13,000 shares at a discount. Alright, so if you understand this so well, we could go ahead to prepare our ledger entries. Now ledger entries, you will debit your bank account with 13,000 naira. Of course, the corresponding credit entry will go to your application account, 13,000 naira. Then the next is your ordinary share capital account. Ordinary share capital account, you are giving out 2 naira, 13,000 naira, 13,000 shares, which is 26,000. You credit to 26,000. Then the corresponding debit would go to your application account. Alright. So the next thing is share discount account. Share discount account, you'll be debiting it with the difference of 13,000 naira. Then the corresponding credit of this share discount account begins your application account. Then that makes up that makes this application account to be 26,000. By the time you sum up this 13 with 13, you get 26,000 naira. So that's okay. All right. So the application account is balanced now. So you'll be left with bank account, ordinary share capital account, and share discount account. All right. So if you understand this so well, too, please practice this question. On 1st of January 1990, Scholars Limited makes an issue of 8,200 ordinary shares of 5 naira each at 3 naira. Application together with total amount are received for exactly 8,200 shares, and shares were then allocated to the applicant through the journal and ledger entries. All right. So the final part of this lesson for today is oversubscription and under subscription. Now, from the word oversubscription, what does oversubscription mean? That is, people are buying or people are subscribing more than what we have to offer. While under subscription is people are, getting below what we have to offer. Now let's discuss about under subscription properly. Now this is where fewer shares are applied for than shares that are available for sales. Take for instance, a company issued about 300 shares, but only 280 shares were applied for. So this is under subscription. While for over subscription, in this case, it is direct opposite of under. So it is when the number of shares applied for are more than the number of shares actually offered for subscription. And a company issued, take for instance, a company issued 1,200 shares, but they received application for 2,000 shares. So in this case, there is over subscription. And for cases whenever we have the over subscription, ideally what you're expected to do is refund the money for excess application. So excess money will be refunded. And in that case, whenever you're refunding excess money, what you're doing is you have to, of course, the money is going from your bank account back to the applicant. So what you have to do is you credit your bank account, then you debit your applications account. All right, let's take this question together. It's going to be the last illustration for today. On 1st of January 1990, Kalakuta Limited makes an issue of 13,000 ordinary shares of 1 naira nominal value at par payable in full, but 14,000 shares were applied for. Now show the entries in the journal and the ledger. The excess of applications was refunded by the company. Of course, the company refunded the excess applicant, the excess application. All right. So the first thing is you write the name of the business, Kalakuta Limited. Then you draw your journal. On your journal, the first thing you have to take note is that when you receive the money, you receive money for 14,000 shares, even though you have 13,000 shares that you have to offer. So you receive money for 14,000 shares. It's going to be 1 naira times 14,000 naira. You debit your bank with 14,000 naira, credit applicant of 14,000 naira. Now, then you have to know, of course, you can't offer 14,000 shares. So you have to refund 1,000. That is 14,000 by, when you take out 13,000 from 14,000, you have 1,000. So you have to refund 1,000 naira, which is 1,000 times 1 naira. So you have to credit your bank 1,000 naira, then debit your applicant, but it's the excess money refunded. Now, after you have refunded, of course, you can now allot shares. Now, the point of allotting, the only shares you could allot is 13,000 shares. So you have to debit your application account with 13,000 naira, then credit your ordinary share capital account with 13,000 naira, which is allotment of 13,000 shares at par. All right, so that is the end of our class for today. So the ledger entries, don't forget, you debit your bank account for 14,000, then the refund is going to your 1,000 naira on the credit side of your bank account. Don't forget. So you could check this. If you have any question, you can always send in your question on our WhatsApp page. If you want to join the WhatsApp page, please, you could get our numbers or you could contact us through the description. Check the description below this video. You can get our number. Please don't forget, like this video and please subscribe to our channel. Thank you and remain blessed. Don't forget, at the end of the week, we'll be sending some set of tests to assess you on the understanding of this topic. If you have any question, don't hesitate to ask us. Bye. Stay safe.